Hey, what's up, everyone? It's Sam from Investors Underground, and we are back with another episode of Trading Takes. Tonight, I'm joined by the usuals, Judah, Chris, and we also have a very special guest who we've managed to claw off the golf course, or perhaps he was fishing. He recently announced that he was retiring for a better life. It is, of course, Mr. Jack Kellogg.
What's up, guys? Thanks for having me on.
Thanks for coming on.
Thanks for coming on, Jack.
Yeah, thank you for taking a break from your busy golfing schedule or whatever you're planning to do today.
I wish, man. I wish I was golfing, but it's been snowy here in New Hampshire, so no golfing, no fishing, unfortunately.
No, that's a shame. That's an absolute shame.
Yeah.
So tonight we're going to talk about. We've got lots to talk about tonight. We're going to talk about the hustle culture. Obviously, with Jack on, that's absolutely perfect. We're going to talk about one of the best pump tweets of all time that lasted, well, I think it was about 8 hours. But first, let's get stuck into the hustle culture. And we'll start with you, Jack, because you are most definitely a hustler. Is the hustle culture beneficial?
What is the definition of hustle culture?
Yeah, I think like in terms of, we talk about like sacrifice. Obviously, people have massive goals and people will sacrifice a lot. Is it worth that sacrifice to achieve that goal? And, when perhaps should people start thinking about readdressing, what they're sacrificing?
Yeah, I think that's a great subject to talk about. And for me, it's at the beginning when you are young, I would say under 21, you should sacrifice 110%. But as you get older and older, like each age, like once you're 22, like sacrifice 95%. And as you get older and older and older, I think that the balance should become more and more prevalent. Because when you're 20 or 21 or 19, that's when you can just give zero fucks and go for it. But as you get older and older, I think that balance becomes objectively more important than the hustle culture.
Mm-hmm. No, that's a great point. And what would you say though then to people, perhaps if we talk, about trading, people who perhaps start trading in their 40s, 50s, how much do you think, I know you're not in that position, but in terms of sacrifice, they're going to have to be somewhat closer to a 20-year-old than perhaps someone of their own age?
Mm-hmm. Yeah, I think that's why you see a lot of people below 30 achieve and be consistently profitable at a higher rate than people that are over 30, because they can sacrifice more. But it seems like the traders that are older and they do find consistent profitability in their 40s or 30s, it seems like they're better traders than the traders that are in their 20s. But if you're going to be a successful trader at 35 or 45 or 55, your odds for success, I think, are significantly less than if you're 21. You have a higher chance to be successful, but you'll just be part of a blended group of other people that are successful. It's kind of how my take is on that.
Yeah, no, that's a great take. And I think obviously, being 20 or whatever, living with your parents, zero outgoings, and probably, no kids is an absolute massive benefit when it comes to the pressures of trading. Judah, what do you think?
I agree with what Jack was saying in terms of age. When you're younger, usually you don't have kids, you don't have a wife, and you have a lot more energy, so you can give up sleep to study or to look at the markets. But as you get older, sleep becomes more important, and you want to really just keep the important things in life. You don't want to sacrifice relationship with your wife or your kids or important sleep time. So it's just between balance of a healthy lifestyle and putting in that work to study in the markets. And I mean, you need to sacrifice something to, get to the next level. And it's mostly going to be time. You don't want to put important people or important health situations in front of that.
No, absolutely. And Chris?
Yeah, there's definitely seasons. That goes with any career, but I think trading in general, there's such a steep learning curve at the beginning that it requires just a ton of hours. But I also think that the habits that people form when they first start trading, they're useful at that beginning, but they can also become so sticky or so ingrained in them that even when those habits are no longer serving them, they still hang around. And I think that a lot of traders kind of deal with that, where it's if you're putting in 16 hours a day at the beginning, 5 years down the line or 10 years down the line, do you still want to be putting in 16 hours, or is it more just because that's what you've grown accustomed to? So I think that there's definitely seasons with trading and seasons with how much effort that you have to put in. But once you get to a level where you understand everything, most of the things that you need to understand in trading, and then it's more a matter of prioritizing what you go after, I think that that's a time to kind of reflect and say, are these habits that I built at the beginning still serving me, or am I becoming a slave to those habits? Kind of unconsciously.
Yeah, no, that's a great point. And Jack, I think you've spoken about this a lot, but you worked your absolute ass off a few years ago. I think so much so that you're pretty unwell, or not, at one point.
Yeah, definitely. Yeah, when you're young, you can kind of you can keep going. And you got to think about it like when you're a toddler, right? Or as you're like 7 or 8 years old, like you just go all the time, like crazy energy. And you just kind of start to plateau out as you get older and older and older. So with the market conditions being the way they were a few years ago, with me being in my young 20s, it was just like, let's put everything aside and get after it while I can, because I have the rest of my life to do whatever I want, if I can achieve what I want to achieve.
Yeah, absolutely. I reckon you must have been quite a crazy toddler.
Yeah, no, I walked at 6.5 months.
Oh,
Like
wow.
I started walking around, yeah, which is statistically pretty young. I think
Hey,
most
Jack,
people walk around like 9.
When did you start running? Because I heard that you and Sam
Oh,
had a pretty epic race go down at Nate's house.
Oh yeah. Started running since I was 8 months. Just had to start training for the meet against Sam.
Man, you absolutely. It was so bad. I was giving it the absolute big one the night before at dinner, and then we were up at 6 o'clock, and we're running on the beach, and I just had this. We were like running from we were doing just shuttle sprints, and I honestly, it's like it's absolute mental scarring, and it's a nightmare. I could just see Jack waiting for me as he gets the line, turns around, and then I'm just literally coming towards him, and he's basically just sprints past me, and I'm like, cheers, yeah.
Yeah, we'll have to do a dash with no cuts next time.
No cuts. Yeah, I know. It's hard shifting this way. I was really worried actually. I might have to retire the turbo name. Unfortunately, you let me keep that. So Judah, I suppose because it's such a tough balance between and I remember a few years ago, like the culture was you need only 5 hours sleep, and I think it's really sensible now that we've had a shift to actually you need sleep is really important. So at what point did you know actually I can probably dial it back a little bit? I can maybe travel a little bit more. I perhaps don't need to be I can get my scans done in an hour instead of staring at the screen for 2 hours.
Yeah, so I mean, I used to do a lot of work at night, and that was because I would go out at night and I would do some work when I got back home, and it would be very late, and it would affect my mornings, how I woke up and how I did pre-market scans. And I didn't feel fully energized and that I was getting enough sleep. So I try to do everything before dinner. Most of the world gets out of work at 6 p.m. So market closes 4 p.m. We have those 2 hours to do anything you need, whether it's market related, whether it's exercising. We have 2 free hours until the rest of the world gets out of their office job. So between that time, I like to either do my scans and all my work that I need to do, my studying and everything, and exercise. And if I'm doing anything at night, it's really just reading, which, that's a normal thing to do at night before bed, get off the screens and read. And I try to get around 8.5 hours of sleep, only because that first 30 minutes that you're in bed, you're not really fully asleep yet. So I try to get like 8 full hours of me asleep. So that's how it changed from like, well, I used to pull all-nighters a lot as a kid, and it was very unhealthy, and I had no energy the next day. But now I went from like 3, 4, 5 hours to 8, 9.
Yeah, I mean, it just wasn't something that was, spoken about a few years ago. And I just remember like when I was at uni and stuff, like, if I had a deadline, I would just be up till 2, 3, and then, I'd be handing it in at 9 o'clock in the morning and then starting again. It was just it was a pretty terrible
With markets, there's no deadlines. Like you could miss a trade, but there's always a next one. If you're going to risk your health for something that it won't even benefit you, like you could just do the work the next day. You're just studying for an ongoing process that lasts forever. There's no deadline on when you need to stop learning and start trading. Like you have all the time to learn what you need.
Yeah, and Chris, I think that's one of the beauties of day trading, or whatever type of trading it is, that you can pick hours that suit you. You can come up with any sort of schedule that fits your lifestyle.
Yeah, and you get to know your style over time too, and you can be more selective. So when people first start trading, you're trying to learn everything. You're trying to just see what's out there. It's like the buffet analogy, and you're just like sampling things, and you're seeing what you like and what you don't like, and what agrees with you and what doesn't. And then after a while, you kind of narrow in on what are those areas that not only are you good at, but you enjoy, you find interesting, and you can really have like a long, sustained focus on it. And then with like the sleep issue and the health issue, I think that this has been a really positive change that I think people like Lance have brought to the table over the last couple of years with, using the professional athlete analogy of, instead of just trading constantly, sacrificing health, losing sleep, bad eating habits, doing that for a long period of time. If you were to take a professional athlete who does that, I mean, it's one thing to do it for a short amount of time, but if you keep that up, people can be subject to burnout. They'll be not in good shape health wise. So really focusing on, your body, your mind, and making sure that you're eating, you're getting proper sleep, you're getting outside, you're doing things away from the desk too. I think that makes for a much longer and more sustainable career if someone enjoys trading and they want to do it for a long period of time. So I think that's been a positive change in the trading culture of just being more aware of things, of like taking care of your body along with just learning how to trade.
Yeah, absolutely. And I just still, remember The Rock, Dwayne Johnson always talking about only having 5 hours sleep. And I think it's Mark Wahlberg who's up at like 4 o'clock every morning and has a really stupid sort of schedule. And I think like, growing up, perhaps you look at these guys for inspiration and you think perhaps that is what success looks like. But I think actually success, like, when you've got people like Lance talking about actually, get your sleep, make sure you're focused during the day. And I think it's only an absolute positive. No, but I think, I think great thoughts. And one thing I just realized that I forgot to kick off tonight with, which I think we will absolutely do now, is congratulations to last week's winner at S_W_C, who correctly guessed that this was the ARKK, so the ARC chart.
That's way too easy, dude. They should not be making a t-shirt for that. Come on.
Well, you actually get a free month of IU. You just need to email Tyler@investorsunderground.com.
Okay.
So we actually came up with what we thought was far too hard, and then I think this was literally guessed within about 5 minutes of the video going up. Literally almost instantly. Yeah. Comment below ARKK. Yeah. Well, obviously, don't say which one it is, Jack. But do you know this one?
I know a letter that it starts with. I don't know the exact symbol, but I remember this actually.
Cool. Well. First person. I think it's I'm not sure if we're doing random first person.
I'll private chat it. I know it has that letter in it, right?
Yeah, don't give it away.
Yeah, I remember.
Chris, Judah, do you two know? Did one of you come up with this one?
No, I didn't come up with this one.
So you know it?
I know what it is.
Okay, cool.
Yeah.
Well, yeah, like I said,
I remember watching it unfold. I was in awe.
Oh wow! I don't know. So well, yeah, maybe I will actually comment below and with a guess. So yeah, like I said, just comment below with your guess. I'm not sure if we're doing first person or picking a random person, but maybe we can give out 2 months. But yeah, place your guess if you know. Right, now let's talk about this. And this is linked with what we just spoke about in terms of the hustle culture, and it's the the pursuit of money and the good and the bad side of it. And I suppose this is a great question for you, Jack. I think you've had an absolutely tremendous, I don't know, 5, 6 years. First question is, how's money changed your life? And be honest. A simple yes is really cool.
Has money?
Yeah, has money changed your life?
Yeah, definitely has changed my life.
For the better?
I would say for the better. Yeah, for me.
And what do you think has been like sort of the main difference that it's made?
It's given me a sense of not having to work. Like I think about like, where am I going to be at when I'm like 30 or 35 or 40 or 45 or whatever it is. And I just constantly have those thoughts in the back of my mind of, I've done the work now, so I don't have to do like a crazy amount of work. And that's what I'm constantly reminding myself of that. And that's the thing that money has really given me, is that I know that I'm 25 years old right now. And with the money that I've earned through trading, conservatively investing that money is going to be able to pay for my lifestyle while I can just go out and live my life. And at right now, being 25, I'm still in this transition period where I'm thinking about what's the next step in my life. You know what I mean? And I'm really excited for that next step, because that's when I really start to enjoy my life and not be in the constant grind. Hence why I made the retirement video, kind of making this transition from, this is going to be my first year where I don't plan on trading full time. And that for me is really the number one thing that I've gained through having money.
Yeah, no, and that's 25. That's bloody, that's amazing. And Judah, what about sort of your quest and when, I suppose, and the other question is, when actually is money going to be most impactful in terms of like for your day-to-day life? Is it going to be now, or are you perhaps thinking actually if I can, in a few years' time, that's when it's going to have a better impact?
I think there's always an impact somewhere, depending like on what it is. So now it would have an impact on compounding that money or using it to socialize or date or whatever it may be. But as you get older and you have, a wife and children, and you got to buy a house and send your kids to school, whether it's public or private. If it's private, you're in for a lot. So I think there's always going to be an importance of money. It's just a matter of like where you are in life and how much you need to support that lifestyle. It's not necessarily like a specific number. Everyone has their own lifestyles and happiness. Buffett's living in the same house for most of his life, and he drives the same car, and he has plenty of money where he can do whatever he wants, but he doesn't choose to do that because that's his happiness and his lifestyle. So everyone has to figure out, where they are in life. And if you're still not happy after spending all this money and buying all these things, then you got to reevaluate everything and see like where your happiness lays.
Mm-hmm. Yeah, absolutely. And Chris, what about your thoughts?
Money is just it's a tool really for your life, and it's an incredible blessing to have money. And with trading or other careers, when you can really have exponential gains if you're on a good run, or if you really know what you're doing over time, money is an absolute blessing. But at the same time, it's just a tool. And so I think that prioritizing what's actually important in your life, that's really what comes first, and then using money as a tool to do that. So if people want a house, or if you want to wipe out all debt, and you want to make sure that you have expenses covered and some passive income coming in, okay, once you have all those things, it's like, what do you prioritize? And if it's freedom, is it doing travel? So I think people just have to think about what's important to them and then use the money to basically serve those purposes. Because what I see a lot is sometimes people use money to do things that they think might help them, but it's actually like bottom of the list on what actually makes them happy. And so if we talk about like the 80-20 principle, where it's basically, 80% of your results come from 20% of your efforts, I think it's very similar with money, where it's, 80% of the things that you spend money on don't really actually do much for you. But the 20%, those are the things that actually make you happy. And that might be, getting stuff to cook dinner for, your family, or that might be getting your parents a house or getting yourself a house. And it's like you have a couple of core purchases or things that can really improve your life and help other people. But I think so much attention is just spent on, making a ton of money and then getting something like, an exotic car or things like that, okay, it might be fun for a week, but it's just a huge money pit. And a lot of times, I mean, some people might be real car enthusiasts, but for a lot of other people, it's just kind of like sitting around there. And if a Honda Civic makes them happy, up to a 6, maybe that makes them happy up to a 7 or something like that. It's not that drastic. So I think that focusing on the things that actually impact your life and then using money as a tool for that, and then also using it as a tool to help other people. I mean, everyone makes their own decisions, but a lot of people out there need help. And I think that one of the most rewarding things and one of the most responsible things to do when you experience success is to make sure that you are trying to help other people to the best of your ability.
Yeah, that's a great point, actually. And there's nothing better than helping other people. And Chris, just, obviously you spoke about, obviously the green Lamborghini is the typical car that we see on Twitter, that whether it's, rented or whatever, AI, Photoshop. When do traders lose sight of this, though? Because I think lots of people, and Nate always talks about this, and I think, Jack has as well. It's always people so they might have their target might be $1 million or it might be 100K in a year or whatever. They hit that and it's instantly bang. What's the next goal? Hit that. What's the next goal? And all of a sudden you're just chasing goals. And perhaps, all that stuff you just spoken about, perhaps neglecting on the sideline a little bit.
Yeah, I think it really is easy to lose sight. And like, there's a great quote that says, you can never get enough of what you don't actually need. And I think if people start, to go down a path and then they kind of see something, running off the path, and so they go chase that, and then they find something else while they're chasing that. It's like you get so far off the path of what you're actually trying to do with your life in general that a lot of these things are just not, they're very frivolous. So I think that, it's good to check in with yourself, and for anyone, whether someone's very successful or whether someone's struggling, or I think that this is a universal thing, because we're people before we're traders. We have to be people who do trade. So I think that it's important for, you to calibrate your life, to think about what's important to you, and to kind of define what path you're trying to go down, and then just be like, okay, does this purchase or does this thing, whatever, is that really something that helps me along my path? Or is this just something that's, running across and it's kind of a distraction? It's not really doing much. So that's how I would go about it.
Yeah, absolutely. And I think, particularly for me, it's really easy. All I think about is buying another golf club. And it's just another golf club that I'm going to hit just as badly as my current golf club. But we all have that dream, don't we? That all of a sudden I buy a new club and all of a sudden I'm a scratch golfer. Jack, so obviously you've done really well not to lose sight of that. But at points you've continually stretched yourself with your goals. Did you ever lose sight of that path to the side? And what do you think most traders do or need to do to make sure they stay on that path?
Yeah, for me, it was never a number that I had in my mind of, I need to get to this amount of money to whatever. Like, I never had really, like, of course I wanted to reach the $1 million mark. Like, that was a big one. But for me, it was always like, I want to maximize the opportunity in the market the best that I can. And that's why I struggled. That's why I struggle taking breaks from trading. That's why I struggle detaching. And I think Nate kind of has the same exact problem as me. And we just see an opportunity in the market, and it's engraved in us from years of doing it over and over again. And you just get this sense of like, I want to perform to the best of my ability. And you start trading and trading and trading. And before you know it, like, you've blown your entire day from 8 a.m. to 6 p.m., like trading that opportunity. And you don't have time to think about other stuff in life because you're so focused on that opportunity and maximizing it to the best of its potential. And also making sure you're even if you have an idea on something, like sometimes you have to sit there and kind of get in and out with big size until you're eventually right, because you have a thesis and you're waiting for it to prevail. And it's tough sometimes. And that's really what held me back as a trader, to step back and be like, damn, my health is shit, or damn, like I need to work on my relationships, or damn, like I need to take like a 2-week break off trading because I'm burnt the fuck out.
Mm-hmm. That's a great point, though. But it's interesting, though, that taking a day off is really difficult. Like what's great about my position is that being British, anytime there's a public holiday in the US, it's an absolute total surprise. So I'll basically find out on Friday that, oh, we got Monday off. And I'm like, 3-day weekend. And I have just such a great time. I relax. It's amazing. But even though like I don't have to trade on any given Monday, for example, to take that day off is still nearly impossible. And like, I've touched on playing golf, but if I have a round booked or whatever, my friends are desperate to play, it always feels like the day that I have a round booked and I can't trade, that's the day I miss some sort of outlier opportunity. And then I'm basically pissed that I've hit over 100 and missed an outlier opportunity. Judah, any thoughts?
I think it's easier once you get to a certain goal. But like Jack was saying, I don't think many traders have a certain number in mind. It's just like more or higher and higher and higher. And like, there's no reason to stop if you don't need to. If you're taking days off, most of the time it's because you need to have that mental break. But otherwise, I think like many traders are just trading to just build their accounts, but there's no real set goal, because once you start setting those goals, you start doing things that you shouldn't be doing, because like you need to hit that goal by a certain time, or it's just there in your mind that like this is what I need to get to, and you may do things irrational or things that you shouldn't be doing to get there. So the idea, or what it should be, is just working on the process and growing and building the account to a certain level. And as far as taking off, I mean, yeah, I don't take off either. I was away last week and I was pretty much like by my computer most of the morning, and then towards the end of the day, and if I wasn't on my computer, my phone was always with me and on. And it's just very hard to detach until you get to a certain level, which I'm not at. But I feel like once you get to a certain age and a certain level within your account, then there's satisfaction there to take the day off, whether it's for mental reasons or for, pleasure.
Mm-hmm. Yeah, absolutely. And you say that though, like hopefully it does get easier. But you take Nate, for example. He doesn't take many days off. The guy doesn't need to work, and yet he's still here. He's one of the first people in the room every morning, and he's usually one of the last people. He's writing his scan late at night, and he's still doing that day in, day out. And Chris, you touched on the Pareto principle, talking about pretty much 20% of for 80% of results coming from sort of 20% of effort. And I think, Jack, that's kind of sounds like where you're going with your trading from now on, effectively trading less, but just focusing on perhaps that 20% and hopefully still hitting, roughly 80% of perhaps what you would have done had you traded full time.
Yeah, the main thing for me with that is I was the type of, like, I think I traded like almost $1 billion in 2022 or 2021, like $1 billion churned in my account to like make a few $1 million or whatever it was. But it was so much size in and out, in and out, in and out, in and out, waiting to like hit the big trade or lose a little. And that is the thing that I'm trying to avoid. Like, I was never really the type of trader to be like, okay, I'm going to take this one position and I have the stop loss here and I have my goal is kind of here. And I'm looking for the 1-3 risk to reward, whatever. And I'm taking like 1 trade a day or 2 trades a day. Like, I was like, okay, I'm going to splatter myself into the market, into everything that fits any type of criteria that I'm familiar with. And I would trade everything. And doing that, I would learn more and more and more and more because I'm getting more and more reps in. And that's kind of what I'm trying to avoid now. I don't want to be in and out, sizing in and out, trying to hit a big win. Now I'm just focused on, I'm looking at like my position sizes, right? So I'm getting in with 50 grand worth of stock or 70 grand worth of stock, long or short. And I'm looking for 10, 20%, 30%, 40%, whatever it is. And I'm not letting myself add, cut, add more. I locked some in. If it rebounds, I'm going to re-hit it or whatever it is. I'm just looking to get in and set my stop, and I'm just looking to get out. You know what I mean? And with that type of trading, I think you make significantly less because you're not going to have those outlier days. Like, for example, Nate I still remember some crazy trade he had. It was on one of I forget what that epidemic was, but it was like started with an S last year. It was like a $20 super choppy stock that kind of went parabolic, but he was like shorting it and shorting it and shorting it. And then like it halted down and had some bad news and opened up down near like 14 or 15. And it was like a monster win for him. And it was because he was there all day, and you're sized into so many things. Like, you're eventually going to catch like a major win. You know what I mean? Whereas if you're just trading one position all around, like kind of the same size, like, you're going to make money more consistently, but you're not going to be able to really have those exponential gains. And I'm not looking at trading anymore as I want to grow my net worth exponentially. I want to take the money that I've made. I want to invest it into different things, like super safe things like bonds and high yield savings accounts. And then you have some in real estate, which is a little bit more risky. And then you have some maybe venture capital, or you have some in other things that can pay 20-30% annualized, but are a little bit more risky. And then I'm just looking at trading as a bucket of possible income for me to make a few $100,000 a year or whatever it is, instead of churning $1 billion to make a few million. Like, I just want to churn maybe like 100 million, or I want to churn like 50 million, you know what I mean, throughout the entire year, and have that better percentage of, if I traded 50 million, maybe I make $1 million, and that's what, 2% of how much I traded, versus trading in an astronomical amount.
Mm-hmm. Yeah,
that makes sense.
No, it really does. And Judah, Jack makes a great point there. But part of the issue, though, sometimes is you just have to be at your screen to realize some of those opportunities that could be, like, particularly in your example, like you're known as the news guy. If you're not at the desk and you don't know the news, you can't make trades. So how would someone in your position, is it even possible for you to pull back?
Yeah, I mean, I think you really just need to be here in the morning to see what the news is, pre-market, maybe 30 minutes. And then all you really need afterwards is, 30 minutes to an hour afterwards, or even less, to take those positions, set your stops like Jack said, and then, you could cut back. And as long as your stops are there, you'll get stopped out. Otherwise, you could check up on it throughout the day, or have 30 minutes before market close. And that's all it really is. Like, you don't need to be there all day. I'm here all day because I enjoy it, and because there's not much else that I'm doing. And like, that's really what it is. I mean, I don't need to be here all day. I'm only here all day because, like, there's not much else to do. And I mean, I ride an IU all day, but most of it is like, if you're looking for these big moves, these small, whipsaw actions or pullbacks, they won't really mean much if you didn't get stopped out. Mm-hmm. So, like, it only matters if you're a scalp trader, or somebody who doesn't hold something overnight, or doesn't set those stop losses, and are looking for like those small moves. Could be big moves, but like those intraday moves. Yeah,
no, good point. And Chris, if someone said to you, an experienced trader came to you and said, I'm looking to step back a little bit, I'm at the desk 4 a.m. to 8 p.m. every day, how would I go about recognizing my A pluses so I can spend more time away from the desk? What would your advice be?
I would say there's so many different trading styles that I think you really need to master a trading style that's compatible with your goals. And so if someone's like a scalper, they're never going to find an A plus enough to really, help them to step back a lot, because scalping, almost by its nature, requires a lot of, small wins in and out, day by day. And that's kind of like the process of scalping. Where if you look at someone who does like episodic pivots, or like a longer term swing position, that by its nature is a much more hands-off approach, where you spend some time, very intensely, maybe for a week or a day, trying to really find this pivot point when a stock goes from having a huge downtrend to something fundamentally changes, the chart changes, and you have all these things turn at once. And if you're able to catch that and basically have a set stop, and then if you're right and it just starts to trend well, I mean, that can go on for 3 months or 6 months, and you could just have a stop in and you can peek at it every couple days. But that's such a compatible style with, big hands off, kind of trading moves. So I think that people have to recognize, okay, what am I trying to do? And then find a strategy that really works with that. And either, it might take some time to learn something. And so it might take a year or two to really master that. But, if someone's in their 20s or their 30s and they really want to make that transition to being at the desk from, 10 hours a day to, trading once or twice a week and then keeping an eye on things here or there, then I think that it's worth that investment to really learn a strategy that's compatible with your life goals overall.
Mm-hmm. Yeah, absolutely. It does seem to be like there does seem to be a natural progression in Kulamagi, for example. I think he spoke about how he made his first million, I think, predominantly day trading, and now he's known as the swing trader, and he trades from a yacht, which sounds like that sounds pretty good fun. I want to segue into something that's related because touched on sometimes you need to be at the desk for there to be news, and there's nothing better. This is just like the best example of it ever, I think, or certainly one of the best pump tweets ever. So this week, this was tweeted. Did you guys see this? Jack, were you at the desk? What was this? This might have been Wednesday. Do you see this?
Yeah, I took a loss on that.
Oh.
I broke all my rules. Only rule of the month. Yeah, so I can dive into this a little bit. So I took off, just to kind of put things in perspective for the viewers who didn't watch like my retirement video or whatever, but I took off November 15th or so to January 15th, 0 trades for 2 months straight. And then I wanted to get back into it. I had a lot of time to think about like the lifestyle and my trading strategy, kind of what Chris was mentioning. And I came back and I was targeting swing trades, like he was saying, and I was targeting getting in a stock and then taking profits like 5 minutes later is like a big rule break for me. So basically, I'm avoiding a lot of small market caps. I'm avoiding a lot of small floats. I'm avoiding a lot of small caps, whipsaw action, all that kind of shit. Like I prefer stuff like Fannie Mae, I prefer stuff like Plug. I prefer stuff that is cheap, but also moves like a penny stock with a ton of volume and a little bit of range, right? So I was doing really good on the month, and like after I came back, was making a few trades, and then I saw a mark pop up, and I just completely I saw the PR, and I talked with my buddy about it, and we're like, yeah, this is definitely a fake PR. Like this is super sketchy, and it's going to be a great short. But I thought that this stock was going to gap up the next day after seeing what it was doing in after hours, so I didn't touch it. And then I ended up buying some at like $1.28 or something when it reclaimed in after hours. And I was like, okay, I'm just going to risk, 110. I'll be fine. And I was playing Rocket League, and I just came back to the desk, and it's like down at like 85. I'm like, I'm bagged. And I ended up taking a loss. And it was my first trade. I think that was a day trade the entire month. It was trading a super volatile stock. It's against my rules to buy anything that's up over 100% on the day. So I broke all my rules, and I ended up getting bagged on it. They got me, and I ended up selling it at like 85 or something. So that was my one bad trade of the month last month. Yeah,
it's pretty brutal. And just for context, if you're listening on Spotify, so yeah, MARK announced an $80 million partnership with Microsoft. Well, that was effectively the tweet, and they included they mentioned Super Bowl, and then this is what is interesting to me is they must have taken a helmet to a random sports shop and said, "Oh, can you just put Microsoft Azure on the side? Like, can you just put the Microsoft logo on the side of my Super Bowl helmet?" Like, that doesn't make much sense to me anyway. But I suppose it is absolutely genius. Chris, did you see this tweet? What did you make of it?
Yeah, I saw it and I was following it. I didn't end up trading Mark, but I was watching it closely, and it kind of goes back to what we were talking about the other week with these companies. They're there to raise money, to pump up the stock, to pay management fees, and that's pretty much what they are. And sometimes you have these companies or these press releases where I used to play them a lot more, where I was like, yeah, this is BS, but this will move, this will do whatever. But over time, I've started to shy away from some of those a bit more, especially on the long side and especially after hours. I won't trade those because after a stock has not been doing well for a while and the company needs money and everything, and you can tell that this is just a desperate, some kind of attempt to get the price up. Why are they trying to get the price up? And it's because they either have an offering, they either have, they need to get their share price up to stay on an exchange or something. So when it's clearly just an attempt to basically screw the shareholders later, I've shied away from that because, again, like focusing on what are your best trades and like what are all the things that you want to have going in your favor, and a management team that basically has their hand on a red button to basically cut your position in half or anything at any time. That's just not the kind of A+ trade that I want to focus on, because I could take that same time and energy and attention and put it towards something where I have similar upside potential, but I don't have that, downside potential. And so I think that that's a big focus for traders, and for me in particular, of, if you look at A+ trades or things that you like to trade, go in deeper and refine and try to find, okay, of these 20 trades that I liked, which are the ones that had the least amount of risk, which are the ones that had the most amount of reward, which ones were most highly probable, and just start to filter. And then just having a mindset of basically, I'm avoiding this for this reason, and whether it works out or doesn't, it's okay, because I'm not going to have FOMO if it ends up going nuts, because again, I want to do this sustainably over time, and I don't want to have these crazy up and downs where I'm, having a huge run for 3 months and then I have a giant position and it cuts it. It's just, it's a very difficult way to live emotionally to do that. So I think just kind of picking and placing your trades in a way that fits into your overall goals and strategies is huge.
Mm-hmm. This one felt a little bit like PHUN we spoke about that, maybe on the first episode, where I had a really nice intraday and then bang, within a few minutes, offering after hours. Judah, what did you make of this tweet and the action?
I didn't touch it. Yeah, like you said, it reminded me of fun as well. And Mark itself, like, it hasn't been doing anything great the past 2 years, and if it did, it sold right off. So that was the same idea with fun. Like, it hasn't done much, and whatever it's done, it's sold off right after. So if you scalp, I mean, there was opportunity. There was a clean trend there intraday. Otherwise, I'd rather wait, a few days. And, fun, after going back down, I mean, especially after hours after that offering, it went down and then it recovered and went back to 48 cents. Like, that's what I'd rather look for. So now in Mark, we have, this. Let me share this screen quick. So now with Mark, we have this massive move from 34 cents up to 148. And we have this massive, 65% pullback in 2 days. And we have these 2 red days with this decreasing red volume. Tomorrow, I would be looking for some sort of bounce. It doesn't seem like a huge move, but if it could get back to this 65 cents, that's 25%. And that is something that I would be looking for rather than that day one, because day ones, they're too random and they're too unpredictable. So for me, I'd rather just wait a couple of days, maybe tomorrow, and have that bounce back a little bit. But no, there was nothing for me on that first day.
Mm-hmm. Yeah, and just for context as well, so in after hours, this might be too small to read, but they filed an 8K, and to cut the story short, what they effectively basically said is, we're going to use we're just a Microsoft customer. That's basically what they said, right, Chris?
Yeah, they said that $80 million was what they were going to spend basically using Microsoft products or something to that effect. I mean, it's so ridiculous that you almost can't believe it. But you have to, if you understand like certain management teams or certain stocks, it's not that surprising. Like, that's why everyone, a lot of people were shorting it. A lot of people, it was getting crowded. People were longing it. And it's just, it's not surprising at all. But, some of these companies are just shameless. I mean, that's a terrible thing to try to do to shareholders, but the management doesn't own any stock, I'm sure. They just use it to raise money, stay on exchanges, and that's the game of it.
Yeah, you've issued plenty of warnings. And Jack, something that I wanted to pick your brain on, and we've had me and you we've had this conversation before, but one thing you said to me that really resonated is everyone knew like this tweet was complete nonsense. But one thing you've always said to me is sometimes you've got to drink the Kool-Aid first, and that's just something that really resonated with me. I don't know if you remember saying it or if you say it a lot, but I wonder if you just could chat about that and just sort of say what you mean by that.
Yeah, definitely. Some of my best trades are always on like the most hated stocks because the most hated stocks when they're trading volume like Mark was. That is the only time. And obviously I saw like every time Mark had spiked in the last year, like it's failed miserably. And with this Microsoft bullshit press release, it brought in hundreds of millions of volume, and I was against buying it right away, and I wanted to kind of see how it was going to look in after hours. So I waited and waited, and that's eventually why I got in. Although I did break my rule because it was up too much and the downside risk. That's why I stayed away from PHUN. But if these stocks were closing somewhere around 70, 80%, 65%, something like that, and traded the same amount of volume, like that's basically my A+ setup to get in for a 30, 40% gap up. And I like following the trend because everybody wants to short it and nobody wants to go long. But when there's that much volume, and as long as the company doesn't release anything bad, like it's going to result in a gap up and morning spike the majority of the time from the patterns that I've studied. And I love getting on the train for those plays because you're able to usually get a pretty tight risk. And of course, if I had small size on it because I wasn't going to go big, but back in my heyday when I was going at them, like it's something that I could end up getting a few 100,000 shares of with a pretty tight risk, and just staring at the computer, making sure that if they release anything or whatever it is, like there's always that risk. But if you're at the computer, like you'll be able to kind of react quick enough. And yeah, some of my best trades were just, buying these stocks and riding that parabolic volume up. And then once it gets up, like you have all these profits from the long side that you can just unload on the short and risk even more than you were willing to because you've already done so well on it. You already know how it trades because you're sitting there and staring at it on the long side. And you're able to have like a ticker of the quarter on terrible stocks that are trading. It's just the volume for me. Like if it's trading huge volume, I love it.
Yeah. So drink the Kool-Aid. I don't even know what Kool-Aid is, but I drink it. I'm going to drink it from now on. And did you say that was your first trade of the month? Or?
No, Mark. I made some good trades that I wanted to that I did talk about. Well, I will talk about a little bit. I traded Fannie Mae, which was a really, really good one for me. That was my first trade back. I bought it it was my first day back. I bought it on Tuesday, the 16th, after Martin Luther King Day, right? Or was that the holiday? We had Monday off. I bought it at like $1, and I just kept adding underneath the breakout, and then it broke out, and I sold it in the 130s, 140s, 150s, and it was an awesome trade. And it took I think I was in it for like a week and a half or something. Like it was perfect, exactly what I wanted, like big win too. And then another trade I had was I bought BFRG on the breakout going into the weekend, increased volume, sideways close over the weekend. I bought that at it was 480s, like right into the close. And I sold it at 710. And then I had a couple other good trades. I shorted Plug today at 510, and I covered it at 440 right at low day. So yeah, I bought that breakout on the 18th. Or the 19th, yeah. I bought on the 19th.
Yeah.
Yeah, so it being a double top breakout plus a liquidation trap plus a perfect intraday plus increased volume and over the weekend on a Friday, it's a perfect storm for a gap up and morning spike for my thesis. And since it was when I was first getting back, I didn't have a ton of money in my account, so I only bought like 6,000 shares or something, but I ended up making like 15K on it. And I was happy with how I executed. I think it was like a 45% return. And then I basically just left it alone. And then Plug was good today too.
Yeah, Plug was, Nate absolutely smashed that today.
Yeah.
Nice day 2 gap up and then, faded off.
Yep.
I mean, he pretty much top ticked that as well.
Yeah, it was a good trade. And I'm just trying to trade like Plug and Fannie Mae are my 2 favorite trades so far, just because they are super big market caps that are trading like penny stocks, and it's something that like I'm very, very comfortable in. And yeah, thus I'm still doing a little bit of the small caps, but I'm trying to just avoid like all the noise in between, all the scalps, all that other stuff, and just focus on like the big daily chart patterns that make sense to me.
Yeah, and the great thing about like opportunities like Plug, and Nate and I have spoken about this a lot, is about the opportunity potentially like the night before, about it in the morning, so actually it's worth me sticking around for the day. And I guess as well with Fannie Mae, in terms of that's an OTC, right?
Yeah.
So in terms of like your quality of life, they don't trade after hours, barely trade pre. So it doesn't mean it's not like you're going to be worrying about it till 7:50 every night, like you would potentially if you were swinging something like MARK. So in terms of quality of life, I'd imagine it's much better.
Yeah.
And Chris, what's worked well for you in January or the past couple of weeks?
I've been trying to trade more selectively. I've slowed down with options in some regards, so just taking a couple of plays here or there. I had SMCI. That was a recent calls play, and with some of the banking stuff going on, then like KRE puts, so like regional puts. So when markets have good range or anything like that, I try to find what are the extremes, what are the extremely bearish, what are the extremely bullish. And as long as it's early on enough, you can ride that. So if you look at SMCI or something, they had their pre-earnings, they had their earnings release. The stock is not huge, and it's basically just funds loading up on it and soaking up dips. And so basically, if I think that the market's going to be strong on a day like that, what is going to be the strongest stock or one of them? And it's been SMCI. And so if I want upside, then that's my go-to for that. And it's the same with KRE, or the regional banking ETF. I'll use that for something like puts. So if you had that NYCB situation where it's basically one of the regional banks that absorbed some of the assets from one of the other failed regional banks, and now that has problems, it's gapping down, that re-sparks that entire sector and all the fears on the regionals of bank runs and things like that. And so that's where I try to find something that is within my circle of competence, that has magnitude, it can really move, with a good range, and something that I can identify the key variables. And so that's what I focus on, things that are having the extreme moves. And if I can get in early enough, I can basically get a waterfall on it.
And that's great. Yeah. Judah?
I think it's mostly been like breakouts have been working, but not as well as like these T+2 and these gap ups. This recent trades, I was away last week, but recent trades were this VERA. This I actually took in pre-market when it had that news, and it's gapping over like this, this long 7-8 month consolidation. And I took this, I think, from 19 until like the 30s. I believe I sold on this day here, and then I just moved on, and like it's about to tap 40 today. And then CRBP was another one. This was another one I also took in pre-market, and I actually ended up selling the same day. And it reminded me like VVOS when I mentioned it in IU in the lounge. I said like it's very similar, and that's what it reminded me of. And we saw what happened to that one after the first day, when it has that just wild move from like the $5 range to like the 30s, 40s. You get like that, just like that fail, because like how much more could it go? We're not in that market like we used to be. And then there's something like rum where it may not have had anything to do, it probably didn't, but we had that Barstool news, and that was the same time where Save was bouncing because of Portnoy. So that was another one that I actually took, I believe, around like 4:04 in the morning off open, and I mean, I actually sold some today. I think I'm still holding a piece, but this is something else that I also took. Like, it's these types of setups. This was a breakout type of setup that was on scan, and we took it like, I believe, this day here. And this is pretty much what I'm just looking for. Like, anything that has to do with like these breakouts and breaking out of these like massive ranges on news. I mean, it has been mostly news based, with the daily chart having like some sort of reasoning behind it.
Well, you are considered the news guy. So
Yeah. Not any random news.
it's rather,
People think news comes out, it's auto buy, but it's not the case.
yeah, no, exactly. There's a lot more units, and that's something that is really clear with your strategy. It's a combination of fundamentals and actually having that technical
Yeah, for
trade
sure.
there as well.
There's hundreds of news that come out a day. You got to narrow it down to, what this stock is, what it's done, especially recently and in the past. And there's, there's float, there's so much more to take in. I mean, if it's earnings news, then you want to see what the earnings was. And if it's growing quarter over quarter, year over year, and compare it to what it's done in the past. If it's a partnership or if it's, biotech, then you got to see like what price it is and what it's doing, how far it is. There's more factors than just having news.
Yeah, no, absolutely. And we've got one section to finish on. Just before we finish, just a reminder that you can actually find all four of us at Investors Underground. Jack's in there occasionally. investorsunderground.com/trading takes. You can find us all there, and that is where Judah is the fastest with the news. Right, and let's finish on some Q&A. So we asked the Investors Underground community for some questions, and this one's this might be putting you on the spot a little bit, Jack. Maybe you thought about it. What were the top 3 lessons that you learned in 2023?
2023?
It was so long ago, doesn't it?
I think it's solidified my idea fully on my market months. So in 2023, it was pretty interesting. I made all of my money in the first 6 weeks. Like every single dollar I made last year was in the first 6 weeks. And then the rest of the year was just make some money at the start of the month and then lose it all by the end of the month and finish like up or down, like whatever. And that just solidified to me like December, January, February. This year it's a little bit different. I mean, small caps have been and OTC have been pretty dead in terms of the moves that I like. So that was another lesson. It's like after April, like I really don't even want to like trade that much. Like I want to maybe be making, a few trades a week. And if the market is hot in January, February, December, like that's when I want to be a little bit more hands-on. So I did take a break in December and January, but I didn't really even see anything that I missed, you know what I mean? Like that I regretted. We had like BBBY in 2023, which was the biggest ticker for me, and AMC, BBBY, GME, like those are the tickers that made the difference in my account, and OTCs as well. And they're not really there. I mean, I did pretty good on Fannie Mae, and that was the best opportunity that I saw last month for me. And it's just in the summer, it's like I don't really think that I have as good of an edge, if any. Another lesson that I learned is, and one lesson that I actually started applying is avoid the Chinese pump and dumps at all costs. No amount of money is worth the stress that they give. So funny enough, like my entire thought process on the Chinese pumps was, I think the first one in 2023 is going to be super good because we went through a long period after ILAG in November, October of 2022, and there is no pumps for months. And I was like, the first pump that's trading decent volume, I think is going to be an absolute banger, which was top, right? And I was shorting, I think I shorted like 40,000 shares at like low a day, $6. And I ended up cutting it like super early, like after it didn't work. But my thesis was completely wrong. Like the first one, that was the absolute worst pump of the entire year, but it just really just solidified like I'm not doing this shit anymore, like ever again, because no amount of money is worth the risk on these pumps. I think I traded like one more pump throughout the entire year. It was like RETO, but other than that, I didn't trade any of them, and all of them pretty much dumped, except for the ZYGO, which was just an illiquid scammy one anyway. But yeah, I'm not trading those because no amount of money you can make is worth the potential blow up or stress. And then for the last lesson in 2023, I don't know.
Beat me at races.
Hey, Jack, I have a question that could tie into this. So for anyone who hasn't seen Jack's video on basically announcing his partial retirement from trading, you had such a good explanation and comparison with trading and addiction, and basically how so many of those factors overlap with trading and the culture. Could you just explain a little bit, how you came about to realize that? And I mean, that was really terrific.
Yeah. I think last year I wrote in my goals, like I make goals every single year. It was like, okay, I'm going to take 2 months off of trading, right? That was my goal for last year. And, June came along and I was like, okay, here we go. Like, I'm going to take some time off. Like, I deleted the apps on my phone. I went like 2 days, like 3 days. And then it's like, I'm re-downloading it and like, I'm trading again. And it's like, I've had other addictions in my life too. And it's like, it's very similar, like thought process. Like, you don't want to trade at all, but like, why are you still trading? And then I came to more and more realization that like, oh shit, like I think I actually am addicted to trading. Like why can I not stop? Even though it's during the summer months, I know my data tells me that my edge is very, very small and I shouldn't be trading. And it's like, why can I not stop? And thinking in the past, like I'd have to distract myself and like take some crazy trip, go somewhere, like be in a completely different time zone just to kind of stop for a few days. So as the year progressed more and more and more and more, getting into that late November, I was like, I'm addicted and I have to just suck it up. And I know that December and January are statistically my best months in trading. But since I failed to take the months off in the summer when I said I would, I need to now just put my mind to it and take off the best months in my statistically over the 7 years in my career. And I just need to only put my mind to not trading, to break a 2 to 3 weeks and get past like the FOMO, get past like this opportunity mindset's going to change my life. So as I just kept going throughout the year, I came to a more and more realization that I'm heavily addicted to trading.
Wow, that's it's amazing. It can be really difficult though to acknowledge that and accept that. And I think, I don't know, you sound a little bit like me in that. For me, whenever I need to break something, I have a really addictive personality as well. Like I kind of have to go cold turkey in terms of like, I don't have, like alcohol, for example, I won't have one beer. I'd rather have none than, because I know one might lead to two. And that was the reason why, like for years, completely unrelated to trading, but, I put off playing golf and like now all of a sudden I'm addicted to it. So I think it's just such great realization. And I think people can learn, an awful lot from that. Sorry, Judah and Chris, they obviously, MC is not interested in what you learned in 2023, but you two are here every week, and I'm sure we're going to cover it a lot more, and people are going to pick up a lot from you. So from CC99283, and Chris, we'll go to you first in this one. Fundamentals. How do you take fundamentals into account when forming a trading thesis?
Yeah, I I think it really depends on if you're day trading versus swing trading versus investing, or you have to have your own set of rules for every style that you participate in. And so for something like MARK, for example, now I'm not going into the balance sheet, I'm not going into statement of cash flows on anything like that, but you can do like a 30-second overview of a company of, does this have anything going for it? No. Do they need money? Yes. Do they have problems staying on an exchange? Yes. Is the management known for doing shady things? Yes. And so I can do like a quick picture, and so I just get a feel or a read on something. It's like, overall, is this a normal company going about normal operations, or is there something off with this? And so I'll take that into account, and that will prevent me from trading things like that after hours. I will trade some things like that if it's like on a breaking news or if it's during the day. But after hours, statistically, that's when the most bad PRs happen. That's when the most offerings happen. And if you just take that out, you can eliminate a lot of risks with those types of stocks. So for like a day trade, I'll take into account for something like that. Now on a swing trade, or like an anchored speculation, or the things that I really like to do, I do a lot of deep dive analysis on the fundamentals of something. And part of it, and like we were talking about, having lower stress trades, it's if you have the right management in place, if you have a normal business actually trying to operate, you have a lot of stress is taken away from you, because there's not someone on that red button just waiting to screw over shareholders. And it's nice to be on the same side of a management team who actually has ownership in the company, and you're aligned with them. And so I want to see something that has a good balance sheet. They're actually making money. The management team's aligned, and I want those things going in my favor. And that helps me to really hold things for a long period of time when the opportunity is there. And then for something like an investment, which is different from obviously a day trade and an anchored speculation, an investment, it's really about what is the consistency of their profitability, what is the revenue, again, the management team, the track record, the sector, alternatives. And so you're taking into a lot of other things into account. And that would be something more like an SMCI situation. So you really have to take fundamentals into account for whatever style you're trading, but you can either do like a quick snapshot, or you can do a deep dive depending on how long you're planning on holding it.
No, great response. Whenever you mention MARK, I kind of think, oh, Jack's going to turn around and give you the evil look. You go, oh, you shouldn't have held it into after hours.
No, I definitely knew the risk with MRK. It's a high risk, high reward thing. So I'm putting into perspective, like, okay, if Mark fails without releasing bad news, I'm looking at losing 15%. If they do release bad news, like, yeah, I could lose 30, 40%. But I still think like the odds of them releasing a bad news release, like maybe you're somewhere at a third, like maybe it's like 30% chance that they're going to release something, 35% chance, especially after surviving the first hour with nothing. I think it survived into 5 p.m. with nothing. Yeah. And that's kind of when I started to walk away. Was after that first hour, because usually they release it at 4:30, 4:15, whatever it is. And you're probably looking at like a sell over $2 the next day. And if I'm getting in at $1.20, $1.30, like my risk to reward makes sense. And it's just a pattern that I'm comfortable in, because I know how hated it is, and I know how it's loaded with shorts. Like you could tell, like on the 150 break, it went like right to $1.65 or $1.70, and it's like that thing. It's loaded with shorts, and the higher it goes, the more potential for like a big blowout and big squeeze, where you're making 50, 60, 70, 80% overnight.
Yeah, absolutely.
That's just my thought process on it, That's how
I know we've had conversations about this before, particularly like there was one last year when we chatted about BZFD that was kind of like similar in that I think they had a midday tweet, and the next day I think it doubled or something like that. It was that was a pretty crazy move. Judah,
yeah.
Fundamentals. You've touched on fundamentals and technicals. How do you take fundamentals into account when forming a trading thesis?
I don't really take it into account much, but I acknowledge it. So like I said before with the earnings, I'm only looking at that earnings on earnings gaps. So if I think about taking a stock, I'm not going to look at their earnings. But if earnings come out today on a stock and it's gapping up, I would look at how it's done in the past. But it also still needs to tie in with the technicals. Like The technicals still need to be there unless it's like a really powerful gap up. But other than that, looking at like the earnings and sales growth, which is quarter over quarter, year over year, really like any like 20-30% plus, even, you know, triple digits would be good. But what I want to see is like the daily being, you know, a good daily compared to like, I don't know, some beaten down name that's like barely moving. And then other than the earnings on earnings gaps, I look at just the float and the volume. And, you know, I just want to see very high volume. And the float is just to get an idea of how quick something can move. Like if it's a low floater, I got to be cautious about size or about how much I could actually put into it. But there's no real effect on fundamentals on how I look at things. If it has, you know, the volume, if it has the technicals, I'll take it. But I do acknowledge the news, obviously. That's just like an extra added, you know, that's what creates the moves most of the time.
Yeah,
The technicals is what keeps it going.
Yeah, absolutely. I think there's definitely all the powerful moves typically when they align. Jack, any thoughts
on fundamentals?
Yeah, just how you sort of take them into account when you're forming a thesis.
Yeah, I don't really use fundamentals too much. I like to be aware of the situation, so I'll trade based on the technicals, and I'll just keep the fundamentals in the back of my head, just kind of knowing what's my worst case scenario, like what am I trading. And obviously there's a wide scope in the market. From sometimes I'm trading like Tesla, or sometimes I'm trading a piece of crap, small cap like Mark, or even in a penny stock OTC. So I keep all of those things in mind, and I use that to kind of gauge where I think the worst possible case was, and I'll just take that into account with the size that I take on the trade. But to actually formulate a thesis behind the news or the fundamentals is I've never really done that. Like I haven't just taken a swing short because I think this company is going to release an offering, or I didn't buy a stock because I think the news is good and it's going to have legs. I'm just waiting for the market to show me if there's volume, if there's interests, and judge my trades based on the daily chart patterns.
Oh, really good, very good. And lastly, we'll go straight back to you, Jack, on this one, since it's going to be a hot topic for you at the moment. What are some best practices for longevity and focus in trading?
For longevity, I think that you need to be focused on lowering your risk tolerance. So it's if you want to trade for like 20 or 30 years or whatever, like this isn't really my goals. But I do think that what's important is having a low risk tolerance and having strategies that are profitable in all sorts of market conditions. So if you only have one strategy, or you also take a ton of risk, like you're not going to make it in the long haul. Like you need to consistently make money in the markets and have strategies that are going to yield you profits 80% of the months throughout the year. They're going to need to make you, you have to be green like 75%, 70% of the months, or it's just going to be way too mentally damaging. Like if you're like going for that one big options win and you're taking paper cut, and you're just looking for like a one monster win, I don't think that is good for longevity. I think, highly focused scalpers, highly focused traders who have strategies and understand what market cycle we're in, they're going to be able to do the best over the long haul because they're seeing green almost every day. And, it's not necessarily the biggest green. Usually they're just making enough money to pay for whatever their lifestyle is. And it's adding up day over day, week over week, month over month. It adds up and adds up and adds up. And that is really what I think it takes to do this for multi-decades.
No, that's a great point. And I think it just really helps to, in terms of longevity, I think the biggest downfall, I think, for a lot of people, and particularly in the early days, is just simply not having enough money or having some sort of unrealistic time frame that I need to be profitable within 6 months, or I need to, if you're paying off a mortgage or whatever, I need to have paid off my mortgage within a year or whatever. I think sort of lofty, perhaps slightly ambitious goals. I'm not saying they're not achievable, but I think in terms of longevity, having sort of money behind you, and I think living massively within your means as well. Like I think you touched on when you make your first $500,000, do you need to buy the Lamborghini then, or perhaps actually it's better off I can
Yeah,
or whatever.
There's so many points to this conversation. I kind of took it in the trading aspect, but obviously health, relationships, like there's so many things to you have to do to focus on the longevity. Like it's such a detailed answer and question, you know what I mean? Because there's so many little things that you're not even going to notice. Like Judah was saying earlier with the sleep, like it's all these things that are added up to make money every single year trading.
Yeah, no, absolutely. And you're right. We could probably spend an hour talking about this.
Yeah.
Chris, any thoughts?
Yeah, definitely. I think having just a healthy relationship with trading in general, and I'll go back to Jack's video, which was again just so good of drawing up so many comparisons with trading, with addiction, or with other things, and it's just so easy to fall into a trap of just trading just to trade, or trading to get bursts of dopamine or other things. And I think a lot of times what happens is that traders can get so zoned in on trading, and it becomes so big a part of their life that they're getting most of the other needs that they need in life, they're trying to fulfill through trading. And so I think that is an unhealthy relationship with trading. And I think that if you want to do this for a very long time, if it's something that you enjoy and something you find interesting, then I think that really having a good relationship with trading, of trading the things that you like, that are lowering risk, like Jack said, things that you find interesting, something that well, and then focusing on taking care of your body, your sleep, your relationships outside of the market. I think all of that, just having a very balanced life, is something for longevity in any career, not just trading. And I think that's also another thing to make note of, is that trading is it's like being a lawyer, it's like being a doctor, it's like being someone in construction or a carpenter. It's anything where it takes a lot of hours to really master a craft. It's something that could be taxing on your body, but if you want to do it for a long time and you really enjoy it, then I think that you have to have a good and healthy relationship with it and focus on a lot of balance.
Mm-hmm. No, great points. And Judah, anything you'd like to add?
Yeah, I think you need to come in with a process, the same process every day, that how you're going to trade and what you do, and stick to that process. Like if you have a specific process, whether it's yours or somebody else's, and it's been working, and then you come in one day and you see somebody else write something, and for whatever reason you chase it, like that's not going to help you. Like you need to be very, you got to be strong on your own process, and you got to cut out the impulsiveness, and you can't be doing random things. You got to just stick to your process. And if your process works, it works. Like you'll know. And that's just what you got to keep doing. And you'll see everything come together once you do that. But if you start doing random things throughout your day, there's zero longevity in there. It's all about the process that you have and sticking to it. And then, everything else we've said in this whole topic, in terms of health and in terms of everything else that we've been talking about, this whole thing is about keeping longevity in the markets. That's the whole point of trading takes, is to help traders stay involved in the markets.
Mm-hmm. Yeah, absolutely. I think we pretty much run out of time today. I think that's a great point to end on. That do random stuff, get random results.
Exactly.
That's what we're end on. I just want to thank you, Jack, for your time today. It's an absolute pleasure to have you on. This summer, I want a rematch or a re-race. Hopefully, you're on preferably in a straight line, no shuttles, and perhaps we could squeeze it around the golf. Although I think you'll probably really kick my ass there.
I don't know. You're going to be putting in a lot of work now.
Going for it. If I know I'm playing you in the summer, I'm going to be practicing every single day. I'm going to go.
Well, let's write it down. Let's play in the summer. It's a done deal.
Done deal. And thank you as ever, Chris, Judah. Thank you all. Remember, subscribe, and flick back to the earlier chart to win a free month of IU. thank you all, and yeah, we'll see you next week.